We're speaking now with Praveer Sinha, CEO and MD of Tata Power. Mr. Sinha, very good morning to you and festive greetings. We're speaking about, of course, your quarterly results, but festive greetings from everyone here at NDTV Profit to everyone in your family and Tata Power, of course. So we'll start on that note. Let's go through your quarter gone by, largely in line. In fact, EBITDA, a beat and margins have expanded in a robust fashion. Can you tell us what's worked in quarter two and what is your overview of the quarter gone by?
Good morning and thank you for all the good wishes and happy Diwali to you and your family and all your viewers. I think Tata Power performance has consistently been good. This is the 20th consecutive quarter where we have shown an increase in both EBITDA and PAT. And I think we have been working consistently to ensure that all our plants operate at full efficiency and full capacity. As also our new manufacturing plant, the 4.3 gigawatt solar cell and module plant has started operating, and we will see its performance stabilizing further in the subsequent quarters. The 4.3 gigawatt module plant is fully operational, and we saw the benefit of that in the second quarter. And the cell plant, the first 2 gigawatt, has already got commissioned in the month of September, and the second 2 gigawatt will get commissioned in November. I do expect that by end of this quarter, of the third quarter, they will stabilize, and the full impact and result we will be able to see in the last quarter. So I think many of the investments that we have started doing, the results have started coming. We have implemented large number of renewable projects. The generation from all of them are doing very good, and that impact we have seen in our EBITDA results. We have also done the third-party EPC, where we have had much better margins with better supply chain control. Now that we manufacture our own cell and module, our margins will further improve going forward. And our existing generation, transmission, and distribution businesses are very consistent in their performance. In fact, you will see much better performance from our Odisha discoms in the third and last quarter with better billing efficiency, collection efficiency, and lower AT&C losses. So I think we do expect that we will continue this trend of improved performance going forward. And many of the investments that we have done will start showing results. We also yesterday approved, the board approved the investment in the 1,000 megawatt pumped hydro project in Bhivpuri, which will of course help us in 28-29 to give 24/7 clean energy solutions to our customers. So all in all, I would say very satisfying and consistent performance from Tata Power.
And Street is seeing that as well. You know, what I found interesting, Mr. Sinha, is that post all your capacity, you are going to have about 59% capacity, post your project completion, 59% capacity for clean and green. Can you elaborate on this a little more? By when does this kick in, and what is the impact on margins when you come to 59% capacity in clean and green?
Yeah, so we already have 6.4 gigawatt of clean energy solution, which is a mix of hydro and renewable, and another 6.5 is under construction. So nearly 13 gigawatt of clean energy solutions will be there. This is, of course, coming up by 28-29. Our target is that by 2030, we should become nearly 70% of our generation capacity should be from clean energy. You will see some more additions, especially in our renewable space, will come. We have been bidding for projects, and now we mainly bid for hybrid projects of solar and wind, or a combination of fixed duration renewable projects, which is a combination of solar, wind, and battery storage and pump storage. So I think our target of 70% by 2030, we are committed to that. And we have a very clear, detailed action plan for implementation, and you will see that we'll achieve those targets.
Dr. Sinha, Neeraj here. It's been a while. Good talking to you. Thanks for joining in, and festive greetings to you. Can we learn a little bit about the modules piece as well? Because I believe a couple of capacities get ready and stabilized in Q3 itself, and therefore we might start seeing the impact of those in calendar year 25 or Q4 of the current financial year as well. Can you talk a bit about that?
So our module has already stabilized. You have seen a very good performance in the last quarter. So our 4.3 gigawatt module plant, we are producing nearly 10.5 to 11 megawatt every day with a yield of nearly 98%. So which is a very good, in fact, it is the market benchmark, and I don't think there are others who are producing at that level. The quality also is very good. Our cell plant, the 2 gigawatt got commissioned, the first 2 gigawatt in September. It is going through the stabilization process, and that will get stabilized in this quarter. The another 2 gigawatt of cell will also start producing in the month of November, and I do expect that by December end, that will also stabilize. So I do expect the full impact of both the cell and module will come in the fourth quarter.
Fourth quarter itself. So, okay, would the earnings trajectory, Dr. Sinha, look materially stronger than what is right now as well? Say, for example, in the next financial year and the year after that. So, FY 26-27, would there be a material growth in the revenue trajectory or the earnings trajectory?
Yeah, so we have been growing by nearly 10% on an annualized basis, whether it is in our top line or EBITDA or our PAT. And we do expect that this will remain consistent. Possibly in some places, we may do much better than the 10%. But on a consolidated basis, I think 10% growth is something that you can expect from us.
Mr. Sinha, just on the solar segment and, both the solar EPC and the rooftop schemes as well, it's been a robust Q2. I just wanted to get a sense of what the outlook is and whether you see this trajectory continuing.
Well, the outlook is very good because a lot of the projects that we were planning to do in the Q2 got delayed because they were on DCR modules. That means domestic cell. Since the cell plant got delayed by 2 months, we could not complete those projects, and they will get completed in the Q3 and Q4. So you will definitely see the Q3 and Q4 performance of our renewable business becoming much better than the Q1 and Q2, and much better than last year also. And you will also see some of the impact of our distribution business improving in the third and fourth quarter, especially the Odisha Discom. So I think you can expect very good results from all these plants. And we definitely feel that some of the strong foundations and we have done for all these investments, the impact will continue to be there in the third and fourth quarter and also in FY 26 and 27.
Okay, just one last point on the outlook on order book for Tata Power as we close off this fiscal. Mr. Sinha, is that on track? Anything that you would like to add qualitatively in terms of how you see this financial year and H2 panning out?
So our order book is nearly 16,000 crores. And one area that we are seeing that there's a lot of traction which is coming is in rooftop solar. The PM Surya Ghar program, which got launched, is now really picking up momentum, and we have been visiting the markets in various parts of the country, and the type of interest that we are seeing amongst the consumers is phenomenal. Apart from the central government support, we see some of the state governments are also providing support, and those are being put in place, and you can possibly start seeing real results on rooftop from Q4 onwards. So yes, you will see substantial improvement in many of the
What is the
areas.
number in
And,
mind, sir, for the rooftop scheme contribution?
well, last year we did something like 2,300 crores. This year we are definitely expecting nearly a 30% increase to that.
Okay, okay. That definitely sounds very positive. Thank you so much, Dr. Sinha, for speaking with us. And once again, season's greetings. Appreciate you giving your time to us at NDTV Profit.